All right, ladies and gentlemen, hello and welcome to Nadex. My name is Philip and I'll be once again your presenter for today's webinar. Just as usual, if you happen to have any questions, if something is not clear that I'm explaining and that I'm demonstrating, please by all means let me know and do my very best to answer those questions as we move through the webinar. Right now, looking at your screen, you can see that small questions box, and I would appreciate if you could give me a very short yes or why in that set box to just let me know that both the audio and the screencast are working properly. All right, everybody, thank you very much, really appreciate it. As usual, today's webinar is scheduled to run for about half an hour. And before we get started, there are our usual risk disclaimers and warnings that I need to make you aware of. So please take a moment of your time to read through those risk disclaimers carefully and make sure that you're comfortable with them. Essentially, it says that trading, of course, involves risk, and you should understand those risks and the instruments you're using before you are getting active in the market. As neither Trade with Position nor myself are investment advisors, nothing that we say should therefore be considered to be actual investment advice. All examples are shown for educational purpose only, especially true for the live part of today's webinar. We will be looking at markets which I think are interesting right now. I will tell you what I see on those charts, but by no means is this is the idea or purpose of that presentation to give you any kind of trade recommendation. It's always just for educational purpose. So please make sure you're okay with this before continuing with the webinar. And of course, we have another risk warning, this time coming directly from Nadex, the exchange itself. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not indicative of future results. Nadex instruments include forex, stock indexes, commodity futures, and economic events. Nadex binary options and spreads can be volatile, and investors risk losing their investment on any given transaction. However, the limited risk nature of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. That being said, let's just jump into the context, into our today's content, and let's have a look at the agenda. We will be looking at the live markets. We will be looking for certain types of moves in those markets. Why are we looking for those types of moves and setups? Well, it's part of our trading strategies, part of those trading strategies that we teach here, both at Nadex and at our homepage at Trade with Position. We always look just at a chart and want to understand what that chart is telling us. And just based from this technical analysis, we formulate our trading strategies and we create our trades. However, markets are moving also, of course, based on fundamentals and on news. And one of those news events definitely happened today in the British pound when the British Prime Minister, Theresa May, announced that she's calling for elections in 2017 this year. I think the next scheduled elections would have been in 2020, and this came as a surprise. And as such, the markets definitely have reacted, and we want to have a look at what the markets have been doing there. Now, just before we get started, I have a small question for you guys, and I would really appreciate if you could give me some feedback on how you, how experienced are you with your trading, and what's going on there. All right, guys, thank you very much. I see we have some experienced people here and also some seasoned professionals. And those of you who are just getting started right now, don't worry, you have come to the right place. And yeah, that's pretty much, I think the most important part to trading is that you want to have a complete trading strategy. You want to know when you should get in, how much to risk, and you also want to know when you get out. And too often, when you're just getting started, it's usually all about, I want to buy something or sell something, but I don't know what, I don't know how many shares, how many contracts, and you're pretty much out there on your own. If you have a complete trading plan, all those questions have been answered for you. So, guys, thank you very much for answering here on that poll, which I'm closing right now. And let me now quickly jump over here to my charting platform. Because as I've said, what we're doing in the markets is usually we want to have a look at the chart and understand what the market is doing there. And I would like to kick it off with British pound against the Japanese yen. Those of you who are our regulars still remember that I have identified this level here. Let's open that daily chart here in one of our recent webinars. And sure enough, we saw a breakout below this level. And ever since then, the market has clearly pushed lower and lower and lower. So confirming this big picture that we saw just there. And now just today, look at this large bullish green candle setting up here, price shooting higher. A trade that has gone pretty nicely for me suddenly is pretty much back at break even right now. What's the reason for that? Of course, the news. We have two kinds of news events. We have scheduled news events, central bank meetings, interest rate decisions, stuff like that. Those schedules, those event dates are known in advance. And I definitely don't want to be in the market when those news come out, at least with regular conventional trading products. With binaries and spreads, those setups suddenly become tradable. But with conventional instruments like stocks, like futures, like CFDs, stuff like that, I don't want to be in that market. And here today, you can see what type of power such a sudden news event can have. The question is, with the market pushing higher, of course, the idea is that, the British government might find a way to still wiggle out of the Brexit and such strengthening the British economy. However, I personally think this is rather unlikely. And coming back again to just looking to look at here at the technicals, you can see where did this push higher actually stop. It just stopped here below this level, which we had identified before. And this is one of the core reasons why those levels, once we have identified them and once the market reacts to them, those stay on my chart. And if we have a look at what's going on here, price, and let's make it even a little bit larger, price declined and we've pulled back. And right now we're sitting here a little bit too deep here above our moving average sell zone. However, it's a clear downtrend. We are still very close to our zone. And with the way that candle looks today, if we get a small bearish candle setting up here for potential short setup, that stop loss location would be, of course, above the high of that candle here. And so the stop would be protected by this very, very strong level that we have seen here develop and being taken care of by the market and being paid attention to by the market over the last few days and weeks. So potentially here a very nice, interesting setup for a push lower. Again, this is just what I'm seeing here. It's never a trade recommendation for you guys. In the end, you have to arrive at your own conclusion on how you want to trade those markets and what is the setup that you're looking for. Let's have a look here at lower time frames. And looking at those lower time frames, you can see price dropped and dropped and dropped, and suddenly everything started to rally pretty much around, don't be confused. This is here my local German time. Obviously by my accent, you have already guessed that I'm from Germany. And this is my local time. Of course, you will see your local time on your preferred charting platform, so no worries about the time. But pretty much here around lunchtime, the news hit the wire, and ever since, prices started to rally. Just looking at the 15-minute chart, you might be inclined to call this essentially an uptrend, which it is, but it's just this uptrend happening here on the 15-minute chart. But of the higher time frames, like the daily chart, the weekly chart, of course, we still have this very intact and alive downtrend, and therefore I might be a little bit reluctant trading those moves right now here to the upside, at least on the 15-minute chart. What can we see here? And let's have a look at the hourly chart. We can see that price, sure enough, spiked higher, and this is what news can do. This is the reason why you don't want to be in the market with conventional trading products when there are scheduled news events, non-farm payroll, for example, interest rate decisions, all that stuff. What can I see here on that chart? Obviously, that trend currently is higher. But here we have been definitely overextended from our moving average buy zone, the area between the 10 and 20 period moving average. And I think it's quite likely that we can see here some kind of pullback towards our moving average buy zone. So the question is, how could this potential setup here be tradable? If you think, the market is strong, but we are definitely overextended, I'm expecting to see some further correction. If this is your call, then by all means, you are definitely free to trade in that direction. Now, at that stage, I would really like you guys to practice using your demo account, placing those trades. And it's easy to log in and to sign up for that account. And just a quick reminder, happened to me just recently, if you forget your login details and you're sitting here on that page and don't know how to proceed, no problem, you just hit that link and the help page comes up, and you just fill in how you want to reset your password, or you want to be reminded of your username, and you're good to go. That's the quickest way. Instead of calling Nadex, you can just fill in that form, and you're up and running again just within a few seconds. Now, let's have a look at the platform and see what we're doing right here. Now, we're looking here at British pound against the Japanese yen. And I'm looking here at my forex binaries, and I'm picking British pound against the Japanese yen. Here it is. And if I think price might be retracing, might be coming back further, let's have a look at forex spreads, for example. And once again, price is currently trading at 138.35 roundabout. And let's have a look at potential setups here, or potential contracts that might be usable here for trading this setup for potential move to the downside. Now, if you're looking to trade this setup, this move here with a spread, remember a spread is defined both by the floor and by the ceiling. And if you want to go shorter market, you want to enter as close to the ceiling as possible. And if I look at those different candidates that we have here, 139.50, way above where price is trading right now, 137, way below where price is trading right now. So currently for those daily expiry cycles, which still have 2 hours and 47 minutes left, I think this one here might just be the sweet spot, at least for me. Your assessment might be perfectly different. Now, if I wanted to sell this contract one time, we are still trading above where above the ceiling level. So right now, what I'm paying, or what I'm getting from my maximum loss here is definitely limited. My maximum loss would be $11. My maximum profit, however, would be $239. Now, the idea here is that price, of course, can or has to drop to the ceiling level, which is to the floor level, which is at 135.75. Way down here, I don't think that this is likely to happen within that time. But however, if I want to have a directional trade in that direction and want to use a spread for that, this might be a contract that you could be interested in. Again, it's not a recommendation. I'm just placing those trades here for the sake of demonstrational purposes. I do not suggest that this is a good setup to trade that way. Essentially, what we're looking for with our strategies is always to trade in the direction of the trend. And this here clearly is a counter trend move. So right now, I think price might be retracing, but the big picture here, at least on that time frame and the next one high up, is to the upside. So for that reason, this is a very, very aggressive type of trade. Let's put it that way. All right, if you think that spreads, if you prefer to trade binaries, for example, here, we could be looking here at the daily 11 p.m. contract, and this one still has 10 hours and 45 minutes left until expiry. Remember, those options, both spreads and binaries, they always have a time to live. They always expire at some point in time. And the judgment call then always is, with binaries, is it trading above the strike price, or is the underlying market trading below that strike price? If it's trading above the strike price, that option contract is worth $100. If it's trading below the strike price, it's worth $0. Therefore, also the name binary. It's true or false, it's worth something, and something in that case is always $100, or it's trading below the strike price at expiry, and then price or value of that option is $0. Now, if you think that retracing, yes, we are overextended, but actually everything is pointing higher right now, and you think price might be pushing higher, you might be inclined to maybe have a look at this contract here. 138.60 as a strike price, round about here. So it's a little bit out of the money. Price has to push a little bit higher in order to be at that price again. But the probability that price might be there is not so small. a rule of thumb to come up with a probability that this might be a winning trade is essentially you take the mid price of the bid and the offer and you interpret that as a probability. So if we're sitting here between 30 and 40, the probability that the market, that the underlying statistical model is giving that contract to be worth something at expiry is around about 35%. Not exactly, not precisely, but as a rule of thumb, taking that mid price as a probability definitely is good guidance, is good, gives you at least an idea about the probabilities involved. Now, if we are looking into buying this contract here, we could be buying this contract now because we think price might be going higher. Nobody knows for sure, but if your take on that setup is price could be going higher, we're looking into buying this contract here and just placing the order, again, just demonstrational purpose, so that you guys see how easy it is to enter those positions. Now, we might also think, wait a minute, I opened just 2 contracts. Maybe I want to scale out of that position if price starts to rally my way. This way, I could start to essentially take a little bit of risk off the table. And the idea here would be I could sell that contract if that contract maybe rallies up to be trading at around 75 bucks. And so I'm now just placing a limit order. I'm not closing my whole position. I'm just sending one limit order to the exchange. And once price is that underlying is trading at 75, or once the price of that option is at 75 and there's an offsetting order in the order book, that order will be executed and essentially I will have scaled out of that position. At that point in time, I've now risked 35 for 2 contracts, 2 times 70 bucks. At that point, I'm taking 75 bucks off the table. So pretty much I should have locked in a small profit there, with 1 contract still being able to shoot for 100 on settlement. So you can see it's easy to trade around your positions here at Nadex. It's not fire and forget, and yeah, you can actively manage those positions. You don't have to. There's no need for precise or active stop loss application here with those contracts. Why? Because your downside is limited. Let's just hit this once again. Here you can see if I was to buy 1 contract, you can see my maximum loss is $33. My maximum profit would be $67. 2 components to this trade setup. I know my maximum loss up front, and I know if this trade is going to work out that I have a very nice reward to risk ratio of 2 to 1. I always, at least that's my style of trading, I always want to see a reward to risk ratio larger than 1. And I also want to have a decent probability that this trade could be a winning trade. If I was going here for another setup, for another contract here, now I've picked one which is even further out of the money. What's the probability that the market is giving this contract to be worth something once lifetime of that contract expires? Well, mid price between 12 and 22, so around about 17%. My reward to risk ratio is outstanding. This is 3.5 to 1, very close to 4 to 1. This is of course nicer than just 2 to 1, but I'm paying for this with a greatly diminished probability that this contract will be a winning, that essentially that trade could be a winning trade or a potentially profitable trade. Now, keep in mind, you always want to balance time to expiry with the probability that this is going to be working out, and also the reward to risk ratio. Those are the 3 elements that you want to balance. Always keep that in mind. All right, guys, just a second. All right, so this is pretty much what we're seeing here. And let me just jump back here to my charts. This is what we're seeing here on British pound against the Japanese yen. Coming back to the daily chart, we can see that, yes, the pound has been getting stronger. Price has started to rally, but obviously at this 138.50 level, we seem to be hitting some kind of wall there. And sure enough, that's our level. And so my overall assessment here for British pound against the Japanese yen is not changing. I'm still at least on the daily and higher time frame, quite bearish on the British pound. Now let's have a look at a different forex currency cross here. Let's have a look here at the British pound against the greenback, and let's have a look at how this looks here on the daily chart. And sure enough, we have pushed now higher here. This looks much more, personally, I think there's much more room here for the British pound to be strong and for price to rally. So if you think the British pound has some potential to move higher, you're pretty much would be trading here in the direction of the market and the trend. You can see those higher highs here. Yes, it was a little bit extended pullback, but pretty much only by minor tick here, a lower low. Overall, this chart looks much more British pound bullish to me than the one with the Japanese yen. With the Japanese yen, we're just sitting below this level, and right now it looks like this level could really be that brick wall, prices crashing against it and then tumbling down again. Here, against the US dollar, I see much more room for improvement for the British pound, and much more potential to actually push higher. Let's zoom out here a little bit, sideways phase, but again, we already see this higher low compared on the higher time frames. Once again, a higher low, and pretty much here also good strong momentum here. And now with price making a new higher high, we can also see that MACD and RSI also making higher highs. So we also get further good convergence here on this push higher. And for that reason, here on this chart, I'm much more bullish on the British pound. Let's have a look here at those lower time frames. Sure enough, the same picture, and you get that same fanning pattern, that structure, that good bullish momentum here on a much clearer scale. Remember, with the Japanese yen, we have this picture that price is essentially the lower time frames looked bullish, but the higher time frames didn't agree. Here, if you want to be bullish, you have agreement across a much more larger range of different time frames. 15 minutes looking bullish, 60 minutes looking bullish, 2 hours, 4 hours, 8 hours, everything here is pointing upwards. So this would be the much cleaner setup for me, just comparing those two currency markets, each involving the British pound. Now, let's just quickly jump here to the platform. Just a second. I'm making this a little bit larger here and coming back to the platform. And I'm looking now at the British pound against the US dollar. And here right now, if you think that this could be a long setup, you might be looking at, and personally I always like to take some time frames and expiry cycles that give me a little bit of time to move in my direction and to be right. So let's have a look at the 7 p.m. and yeah, 127.60, so pretty much trading at the money here right now. And if you want to trade this market here, now probability that this is going to work out about 55%. Why? Because 55 is pretty much the mid price that we're seeing here right now between the bid and the offer. Now, personally, I don't like that trade because I'm risking here $60 in order to have a chance to make maybe $40. It's just a chance. And as I've said before, I always like my reward to risk ratio to be larger than 1. That's not the case here, so I might be a little bit reluctant to enter that position. However, that being said, just for the sake of demonstration, let's just jump in here. My maximum loss would be 240, my maximum profit 160, and I'm just raising that order right now, just to show you guys once again how easy it is and how to use and handle the platform. And just for that purpose, just going for a demo account really is a good thing to help you get used to the platform and practice and exercise there. All right, so let's quickly jump back here, and the last market that I want to cover today is gold. Gold has seen some nice price action over the last few days. And if we're jumping here and have a look at the gold mini futures, we can see, and let's jump here to the weekly chart. We can see it's a downtrend. We made a lower low, we made lower highs, another lower low, and now we just rallied here to a high. We made a higher low, and now we made another higher high. So the trend here on the weekly chart definitely has switched, has changed back to an uptrend. Good strong momentum here, both in RSI and MACD. So the big picture here on the weekly chart for gold is definitely bullish. If we have a look at the daily chart, we can see that same picture here. Now, this pullback here, mid of March, was a little bit too deep. We had a short-term shift of trend here, but a change of trend here. But again, once again, a higher low, another higher high. So once again, the trend clearly is up here also on the daily chart. We are a wee bit overextended from our moving average buy zone. And we see that fanning structure in our moving averages and good strong convergence here, once again, both in MACD and RSI. So overall, the picture here clearly is pointing to the upside. Let's have a look at the lower time frames, because here on the daily chart, this is a little bit too overextended, and those recent 3 candles here suggested some weakness in the market, and for that reason, maybe there's a better potential trading opportunity waiting for us here on the lower time frames. And if we have a look here at the 4-hour chart, and guys, that's a very nice thing to see. The 2-hour chart has pulled back way too deep, way too choppy, pull back too deep. You can see those 10 and 20 period moving averages already have crossed each other, leaning more towards the bearish side again. But if we step up our time frames, if we move from the 2-hour to the 4-hour time frame, the picture looks different. We start to see small bullish candles setting up here directly in our moving average buy zone. And sure enough, there would have been some nice potential trading opportunities, especially that small candle here. Easy move there. Large move of volatility once again here on the recent candle. But overall, the picture here still looks quite bullish. You might argue that this is a lower low compared to that one. If this worries you, then let's move from the 4-hour chart to the 8-hour chart, and this already looks much cleaner. We're once again here setting up pretty much directly here in the buy zone. So overall, my stance on gold is bullish. Again, it's just what I'm seeing on those charts. You definitely might be seeing something else, and in the end, you have to own that trade, which means don't just do what anybody else is doing. You must understand what you're doing there, and you must know that you're doing the right thing. Our trading strategies are nice trading strategies. I like to trade them on my own account every single day with my very own money. But everybody has to find something that is working for him or her. And it doesn't make sense to try to implement a trading strategy that you just don't like, that doesn't make sense to you, and that is going against your fundamental belief, principles, or whatsoever. All right, guys. So that's it for the live part. And before we come to the final slide, I have another question for you guys. Pretty much for the upcoming webinars, I would really appreciate if you could give me some idea about which topics you would like to see there. So the poll is open, and yeah, pretty much I would appreciate any feedback that you have for us there. Paulina was asking about the platform to view the charts. You have to think about what you want to use and how heavy you want to invest there. Nadex is coming with their very own charts, and this is a very good starting point without any money to be paid. And so you have a basic charting package already there on the Nadex platform. I make my living trading the markets, and for that reason, I want to have good fast charts and just something steady and sturdy to work with. And there are many different good potential charting software packages out there. Once again, this is pretty much like buying clothes, and you have to try that stuff and see what works best for you. Currently, what you saw today was TradeStation, but there are many other platforms, and from very cheap to quite expensive, you have to find something that works for you guys. All right, thank you very much for the feedback on which webinar topics you want to see. Really appreciate that. I'm just closing the poll now, and I'm moving over now to the last slide here in our presentation. Yeah, that's pretty much it for me, that's pretty much it from me for here and today. So yeah, I hope you enjoyed it, you found it useful, and please sign up for our other webinars. Would really appreciate you guys re-attending those webinars and letting me know what you like, and yeah, share some more market analysis with you guys. As usual, after this webinar, there should be a short survey, and any feedback that you have for us there is really appreciated. We're running those sessions for you, and so we definitely want to cover what you want to see covered there. And just checking the questions again, and I think we're good. And just a final quick poll for you guys while you see those ways to be in touch with Nadex here. I would really appreciate if you could just let me know, are you a seasoned professional here in attending those webinars? Chuck, thank you very much for that. I definitely know that you are a seasoned professional and a regular here. Really appreciate you guys showing up all the time. All right, guys. Oh, many newcomers here, and yeah, thank you very much for tuning in, and I definitely would love to re-welcome you guys for our next session.